Hello, chart watchers, and welcome to this Monday, December 18th, Market Watchers Live with Aaron Swinlin and Tom Bowley. I'm your host, Tom Bowley. Today's show is being recorded, so you should be able to play back any or all of Market Watchers Live at your leisure. If you're unable to attend the show live, you can now go to www.stockcharts.com/webinars. Follow the link to Market Watchers Live and play back the show. Each show will be archived on our site until the next show begins, so you'll have roughly 24 hours. If you'd like to review an older show, you can now find those at our YouTube channel or on Facebook. During today's show, please feel free to submit ticker symbol requests, questions, and comments using the chat window next to the video player. Later in today's show, we'll select stock symbols from your requests, and I'll use those in the 10 in 10 segment at 12:50 Eastern Standard Time, where I'll attempt to annotate 10 stocks in 10 minutes. Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. If you want to be part of the show, you can reach us via our chat room or Twitter. Our Twitter handle is at Market Watchers Live. That's at MKT Watchers Live. As you leave today's show, we'd love to hear your feedback. In the lower right portion of your screen, you'll see a How'd We Do section with a link to a very brief survey. Let us know what you think of Market Watchers Live, and feel free to provide us suggestions for improving the show. For those of you joining us for the first time today, welcome to the show. Got a good show in store for you, and we're certainly glad you're with us. And for our regulars, welcome back. Before we get into the action today, just a couple of quick announcements. First, there was a Chart Watchers this past weekend. We'll talk about that a little bit later in the show. Tomorrow, Chip Anderson will be joining us for Everything Stock Charts, fairly new feature that we started maybe 4 or 5 weeks ago, but any of the new things happening at Stock Charts, Chip will go over, maybe even clue us in for some things that we can look forward to in 2018. We'll see. Greg Schnell will join the show on Wednesday, so he'll be with us this Wednesday, and I'm sure will enlighten us with a lot of his research regarding the commodity space and so forth. There'll be no Market Watchers Live next week between the Christmas and New Year's holidays. But we will be playing the best of Market Watchers Live, which will include some of the recent guests that we've had, their interviews, and also many of the educational segments that we've been featuring. And at some point later in the week, we will have that up on the site under the webinars tab. When you go through the Market Watchers Live show, we'll provide you a schedule of the things that will be discussed during the 1.5 hours each of the days next week. But Market Watchers Live, the live version, will actually be on Tuesday, January 2nd, 2018. So we'll be on this week. None of our shows will be live next week, but then we'll be back live again on Tuesday, January 2nd, to bring in the new year. And with that, I'm going to bring in my co-host, Aaron. How are you doing this morning, Aaron?
I'm doing just lovely. And how about you?
I'm doing great. I actually went to the Panthers-Packers game over the weekend yesterday, and I thought that was a great game. I got to throw your Rams some love, though. I tell you what, they looked really good in the game against Seattle, and they're playing as well as anybody right now.
I keep waiting for them to fail me because they're really good at that. So, but it looks like they're going to hang on, so that's always a good thing.
Yeah, they've got an offensive juggernaut out there, and actually a pretty offensive-minded coach. So I think the Rams are around for a while, but we'll see.
We'll see.
Yeah. But it is a new week, and I tell you, the market exploded on Friday. We saw, strength everywhere and leadership from small caps, and we're getting some pretty good action again today. And we're going to get into all of that in just a few minutes, but I'm going to let you start off and go through the agenda with everyone.
Yeah, and you can tell it's Monday because I still have Friday's agenda name on there. Sorry, Mr. Producer. Market updates on the hour. I'll be giving you one shortly. We have the technical headlines. Tom will fill you in on any interesting news out there right now. We'll be looking at our Monday setups from last week and picking new ones for this week. John Hopkins will be here with us later in the program to do an earnings spotlight. 10 and 10 to 1. I'm taking your symbol requests and apologize greatly if we don't get to yours. We really get a lot of them. So hang in there. We'll eventually get to yours. But our first one today is going to be the iShares Semiconductor ETF, SOX. So if you want to go take a peek at that particular chart and take some notes, you'll see how you stack up against Tom. And I have a decision point report for you at the end of the program. I'll let you know what we saw last week and what we should expect this week as far as the big four: dollar, oil, and gold and bonds, as well as all of the decision point indicators. So want to stick around for that. And of course, at the end, we'll do some mailbag and wrap up and talk a little bit more about what questions you have and that sort of thing. So with that, I'm going to get off of this page because it still says Friday. Let's go ahead and do our first market update. All right. So this is our member homepage, of course. I hope everybody is familiar. But if you're not, you need to get your membership going so you can get this page. Well, I wanted to first look at our predefined alerts. These are the alerts that we have set up at Stock Charts that run all the time and give us the latest. And at this point, see, you could see it just updated right now. We're seeing the TSX is setting a new all-time high, and the Russell 2000 small caps are having a great day. We'll be looking at that shortly. We've got the NYSE, we've got NASDAQ. All of these indexes are climbing. We're even seeing new all-time highs on some of them. The Dow, NASDAQ, and S&P 500 all have set new all-time intraday highs. We'll have to see if those closing prices are new all-time highs. But for now, intraday, we've already hit that. Let's go ahead and I'm going to take you to our candle glance so you can see what is going on across the board here in the markets. And currently, as you can see, big opening. Various thoughts about why that has occurred from the tax plan to the Fed from last week. So we'll have to see how we continue. But that gap up was very impressive. But now you can see that with the Dow and with the S&P 500, the market's taking a pause. We're moving sideways. We're seeing some consolidation, which is why it'll be interesting to see if we can pull off a new all-time high for the Dow and the S&P 500. NASDAQ's looking pretty good, though. It's now is breaking out to new highs currently after settling there for a little while. Russell 2000, again, great morning, and now moving sideways. Wilshire 5000, similar appearance. Treasury yields are up, currently reading 23.78. We can see UUP, the dollar ETF, gapped down quite a bit, and we're seeing it moving out of those intraday lows, but not a good start for the dollar today. Commodities doing well. Oil doing pretty much unchanged right now. We're only up 1 penny on USO. And I'm a little concerned because I see this double top on this intraday chart, this 2-day chart. So we'll have to see if USO and oil can stay on the positive side. At the end of the program, I will be doing an analysis of UUP, USO, and GLD. And currently what we can see is that gap up and moving higher for gold. Looks like it's made its intraday high, but we'll take a recheck on that in an hour. The VIX is moving lower after, moving quite quickly up to the 9.9 level. Now we're already back down to 9.28. All of these readings still very bullish. And we can see that advances are leading declines at this moment. And with that, I'm going to conclude our first market update. At 1 o'clock, I'll be going through our scooter movers, and we will also look at the candle glance again.
All right, sounds good, Aaron. The market having a really good day. And first thing I'll do is just pull up. We can take a look at the 10-year Treasury yield. The December housing market index came out this morning at 10 a.m. It was at 74, which was much better than expected. The market was only looking for 70. And you do see a little bit of a move up in the 10-year Treasury yield, but nothing really substantial. But what is interesting is that the home construction index, the DJUSHB, after it was moving up, we talked about the fact that it got very overbought, but that MACD looked really good. And while the MACD has rolled over and started to head down, a lot of times we'll find support at that rising 20-day moving average, and that's exactly where we found it. And now today we're getting a nice gap back up. And currently this space, the home construction index, up 1.33%. So it is a one of the leading areas of the market today, which is good news. Also, if we take a look at the XLY, this is the consumer discretionary ETF. It had been on fire. We saw a pullback after a gap up, I don't know, maybe 2 weeks ago. But then since then, it is right back on fire again to the upside. Part of this is due to home construction, where we're seeing a lot of strength. But really, the thing that's lighting a fire under consumer discretionary, no doubt, is retail. And here is the XRT, the S&P retail ETF. After pulling back and nearly touching that rising 20-day moving average, it's just blasting back off again and setting new highs, which is good. Now, some of you might look at this rather astutely and say, well, isn't this a negative divergence? We got a breakout here, and look at that MACD. It's much lower. And I would say don't jump to that conclusion just yet. Let's let this thing run, because many times in an uptrend, when you first start an uptrend and you get that first pullback, you'll see that MACD start to roll over a little bit. And then when you first make the breakout, there will be a slight negative divergence, but as prices continue moving up, this will a lot of times just be eliminated, and the MACD will move to a new high. So I think just in my experience following the MACD, I really try to be careful not to jump to too many conclusions. Now, one thing that would bother me is if we left a long tail. In other words, if we closed really weak today and we left a tail up there, a false breakout, and came back down and closed back near the low today or even below it, that would be short-term bearish, not long-term bearish, but short-term bearish, meaning that maybe we'd go back down and test this 20-day moving average before we'd get another run to the upside. But again, that's only if we get a big reversal. I don't expect that. I do think that there are a lot of these smaller cap retailers that are really moving to the upside. A lot of the small cap in general moving much higher. As I pull up the IWM, which tracks the Russell 2000, you can see after pulling back and testing the breakout level, we had a high back in the month of October right near 150, 151. You can see all these tops right in this area struggling to get through. We pulled back, tested the prior breakout, and then came soaring back through this 150, 151 area, hit 155 and change, and then notice the pullback. We came back right into this 150, 151 area again before taking this move to the upside. Now, at the current level, the IWM would actually close at an all-time high. So you look at these and you say, well, it's not as high as it was. But remember, with candlesticks, these filled candles, you're closing at the bottom of the candlestick. So this is actually a hollow candle. We'd be closing at the hollow end, the upper end of the hollow candlestick. And right now that would be at a new high. So you want to keep an eye on the Russell 2000. This is the time historically when this group really has a tendency to run to the upside. I had mentioned that once before in an article. I'm going to talk about it again in just a little while, but just wanted to keep you posted that this is a group to really watch closely into year end. I actually own the IWM, just full disclosure, just to make sure that I've got a portion of my portfolio in this area because of the strong bullish seasonal tendency that we typically see with the Russell 2000. A few more things to talk about before we get into our Monday setups. First, another group in the consumer discretionary space, which is hotels, making a really nice breakout. If I can get it typed in correctly. This is the DJUSLG. So this is the hotel index. Check out this breakout today. Very strong move. Again, look at the rising 20-day moving average holding as support. And we're getting this quick move up over the last couple of days, breaking to new highs on this index, which is worth watching. Internet stocks within the technology space, keeping an eye here because it looks like we're getting a breakout as well on internet stocks. So some of the stocks within this group, like Facebook and Google and so forth, you may want to keep your eyes on. And finally, the tire index, not exactly the most, aggressive group. And you can see it has been trending down. So you might say, well, this doesn't look very good. But I actually like the move that it made at the end of November, moving back up and clearing the bottom of gap resistance. And notice when it pulled back, it hit this rising 20-day, and it's bouncing off of it. So I think a breakout above 114 would be bullish here on the daily chart. And the reason I bring this one up is that when you look at a weekly chart, you'll see that this is an index that tends to go through periods of consolidation only to break out again. And throughout 2017, we've mostly been consolidating with a little bit of flavor to the downside. And with the daily chart starting to pick up, I would watch because we may see a trend line break. Right now we're in this channel, but eventually a move back up through about 115 or 116 could signal the end of this down channel. So this is a pretty interesting group based on what it's doing today. And the fact that it's bouncing off of that rising 20-day moving average is starting to show more bullish tendencies on the daily chart. And just keep in mind that we are continuing to move higher in this index when we look at a weekly chart. But sometimes we'll get caught up in that daily activity and not really step back and take a look at the big picture. The one individual stock I wanted to mention today, I think we talked about this on Friday, but CEO Hunter Harrison from CSX talked about he had complications from a recent illness. Well, he actually unexpectedly passed over the weekend. And if you take a look at the chart on CSX, I know in pre-market action, it actually was down. And let's see if we can get this up. Of course, my internet wants to be a little slow here. Yeah, gap down again today, but it does have a hollow candle. So I think the longer term pattern, again, if we go to a weekly chart, the daily may be a little disappointing because we didn't hold this breakout level around 54, 55. And whenever I see a problem with a daily chart, I just like to back up look at a weekly chart. And you can see from a weekly perspective, we had a negative divergence on the highs back in May. See the higher price, lower MACD. We went sideways for the better part of the summer and into early fall and got a 50-week test, first one in a long time after that negative divergence. Also got the weekly MACD down close to the center line. I think as long as CSX holds price support around 47.50, I'm fine with it from a longer term perspective. So I expect over time we'll start to see that daily chart begin to pick up. A couple of earnings reports that come out later in the week, FedEx and Micron. I think they may be out tonight after the bell. And then General Mills, GIS, and Bed Bath & Beyond, BBBY, come out tomorrow. And then Nike on Wednesday. And Nike, let me just pull this chart up. Nike, based on the chart, I'm going to say that they are going to report a pretty strong number. And here you can see on this move up, I mean, it has been almost unabated since the middle part of October for Nike. So I would be looking for a really strong report. Now the question becomes, is it a buy on rumor, sell on news kind of a deal? We won't know that until the earnings come out, the reaction, see the reaction. But at least for now, I would suspect that we are going to see a strong report out of Nike on Wednesday. So with that, let's go ahead and jump over to the Monday setups for this week. I guess, Aaron, the first thing we could do is start with how we did last week. So I'm going to pull up GNRC, which last week was my pick at 49.29. And it is making a pretty nice move today, breaking back out above the 50-day moving average, currently sitting at 50.26. So it's up almost $1, so about 2% on the week. So it had a pretty decent week, even though it was volatile. You can see this move down here. I had actually posted this one as one of the 5 stocks, one of the 5 small cap stocks to consider into year end, because there is such a historical tailwind typically for small cap stocks as we approach the new year. And this one to me looks like a cup building. And I think if we can break out above this middle November high, which is just below 51, I think if we make that breakout, this could be a pretty quick trip back up to test the right side around 53.5, 53.75, whatever that open was there. So I think GNRC still looks pretty good. But that one was up 2%. And I think PMO, which was kind of ironic, which you had last week, is currently, let's see, it was 12.53 at the time we did last week, so 12.42. So it's down, but less than 1%. So not really much from the unchanged level. So do you want me to go ahead and give my picks for this week first? I'm not hearing Erin. I'm not sure if she's there.
Yes, I'm so sorry. I had myself muted.
Okay.
Yeah, that sounds fine. I'm happy for you to do yours first. So
All right.
here we go. Monday setups.
All right, here we go. GNRC. I'm sticking with it. This is the first time ever, but
Yeah.
I'm going to stick with it a second week. I like it. I like the space. I like the chart. I like the volume that came back in on Friday. I like this move that it's making back up above recent highs. So I'm going to let this one roll for another week, but I'm going to use the current price, which is 50.26.
Mm-hmm.
So that will be the level for this week's GNRC pick. and then I'll give you just a couple of others that I selected. One of the ways you can reach or look at these other setups that I have a Trading Places Live chart list. So first, let me show you how you can get to it. So if you go into my blog, Trading Places, and right near the top, you'll see click here to see the live chart list. I don't always have this done before the market open on Monday. Today was an example. I didn't update this until probably about an hour ago, hour and a half ago. But you'll see a bunch of setups, three of which, in addition, I didn't put GNRC in here for this week's setup because I had it in there from last week and I still like it. But here you can see the three other stocks I like this week. One is Atlassian Corp, TEAM. And I just like the fact that we get these pullbacks. And this one I actually thought about for this week because we were pulling back, but I was a little afraid that it might hesitate some more at the moving average and also trying to get above these reaction highs back in earlier in December near the 48 level. So TEAM is certainly one that I like. I think eventually we're going to make another run for the 52, 53 area. One problem today too is I think software was lagging in the technology space, and as a result, I think that could be having a short-term negative impact on TEAM as well. But I do expect eventually a breakout. And I think when it breaks out above $48, especially if you see the volume coming back in, I wouldn't be surprised for another quick trip up to the 52, 53 area. The second one I had is DNR. I actually own this one. DNR came back down to the bottom of this gap support and was close to the 50-day moving average. Volume's been a little heavy, and we did get this reversal. And this is, I talked earlier, if we got a false breakout, forget which stock I was looking at earlier that we had, but if this is why I try to pay attention. If I'm getting a breakout and then it doesn't hold into the close, I get a little nervous when I get that a tail like that, false breakout. You can see that actually led to some short-term weakness down to gap support. So I try to pay attention to those kinds of moves. But then when I get down to gap support, I think the reward to risk is much better, even though, again, the volume has been a little heavier on the selling. I think so far it's holding this area. If it were to close much below the 150 to 155 area, I'd be really careful. But otherwise, I'm looking for another move back up here to 190. And then the last one I have for this week is SBAC. And on SBAC, actually, I just bought this one as well. But this one came down and is testing this area, at least the initial area of support at about 162. And you can see from these pink arrows, there was a negative divergence in place. So here was higher price, lower MACD. So what I look for is a 50-day test and a MACD centerline reset, what I call reset. And we're getting those. So we got down today very close to that 50-day moving average, and we're very close to a MACD centerline reset. And you can see the RSI also dipping down in the 40s where I like it from a reward to risk standpoint. So anyway, those were the three that I liked in addition to my actual pick for this week, which is GNRC. Just sticking with last week's winner, hoping I can get another week out of it. What do you have?
All right. I have a few more, so I'll get through there very quickly. All right. I'm going to share my pick first. Usually I do that last, but I'm going to go ahead and share it first in case I don't get to all of these stocks I have. Of course, that's what I had last week. So I had that in my Monday setups. I don't have this list where you can just get to it, but I will have the list of stocks in the Market Watchers recap so you can at least go and look at those charts. So the one I'm actually picking this week is Google. And, you pointed out the internet space, Tom, on earlier, and I have to agree based on just this chart alone. I think it looks, of course, very similar to what you had looked at. And I really I like this setup. I think, this is a strong group and it's getting stronger. I've got that nice breakout. I could actually bring this down a little bit lower because the closing highs are actually a little bit lower than this, but that's a really nice breakout. And we saw a lot of volume on Friday, and I think that's a good sign. I've got the PMO buy signal. You've got OBV looking great. You've got the scooter looking great. So I'm going to I'm going to do this one at 108.329. So we will write that down.
We got it.
All righty. Okay, so let's look at a few of the other ones I had. Baxter. All right. You can see a lot of these. When I did the scan this morning, they hadn't actually had some of these crossover buy signals. So very encouraging to see that. I like this chart. It came up on my scan. My PMO scan there is a link to it at the bottom of every Market Watchers live recap. So no need to ask me how to get to the scan. I've posted it. It's in a blog article. So feel free to copy it and manipulate it to fit your own needs. So anyway, we can see it's hitting overhead resistance. So I didn't pick it because we really don't have a breakout yet. I like this in the thumbnail. You can see a flag formation building, which could be really good for Baxter. And like I said, you've got that PMO buy signal. Let's see. All righty. Chatham Lodging Trust. And I think this might be right in that hotel space I think you talked about earlier as well. Nice textbook breakout here from an ascending triangle. Again, got that PMO buy signal. Not liking the volume that we had on Friday. I'd like to see some strong volume on this breakout. Looks like we're starting off with a decent day with volume, but we still need, I'd like to see some more. Again, another reason this one didn't get picked. Plus, it's already on like an almost 3% breakout move today. So I think I might have missed out on that one. Four Corners Property Trust, again, looks really similar to that Google chart, doesn't it? We've got that nice breakout from previous tops in November. I like seeing the way these EMAs are set up, with the DecisionPoint trend models. We like of course, the faster EMAs on the top and the slower ones on the bottom. And when you have this configuration, that means you have a buy signal in the short, intermediate, and long term. So you'd like to see that. Nice PMO buy signal. You can see the OBV has been stretching upward off of this rally. So I think that looks pretty good. Better than Baxter just because it's had the breakout. Another breakout off of a V, what I would call a V bottom. We've got the PMO buy signal. I just didn't like on this one the fact that the PMO buy signal kind of came in overbought territory. And again, for the purposes of this exercise, I didn't feel that great about it, but it's still I think it's still a good stock right now. Again, you've got that really nice setup with the EMAs and a breakout. So we don't have to wait for that breakout. It has occurred, which I like. But I can see, I don't do candlesticks, but I can see what might be a shooting star here lighting up, which off this gap, we could be looking at just a quick island reversal. So something to keep in mind with ICUI. And Natus Medical, double bottom, which I like to see. We're on buy signals in all three trend models because you can see how the EMAs are lined up. Haven't quite had that PMO buy signal, but the PMO is now above zero, and we would be getting that buy signal above the zero line, and that shows that there is some internal strength there. And at this point intraday, we have broken out above the neckline for this double bottom. So kind of like the looks of that 200-day EMA held up. We're not quite to the kind of breakout I would want to see, but I think this one looks pretty nice. And we looked at that. And here we go. The last one that I have. Look at the volume from Friday. We're not seeing quite that right now, but I really like that OBV taking that big pop upward. You've got the scooter now in the hot zone. Don't have the breakout yet. So again, this is one of those times where I would watch, probably add it to a watch list, but I think it is worthy of a watch list at this point. And that's what I present on Monday setups. My pick is the one I go with, but I think the other ones are ones to really consider and add and look at over time to make sure that you get the setup you want. But this one's looking pretty good. And so those were all of the Monday setups that I have currently. So Monday setups is something we do like to do on Mondays to give you that look at what's getting ready to happen and come up. So today, the ones we looked at, again, I'm just going to give you a review here. And actually that one, go back. This one I got the price wrong. It is 10 excuse me, 1083.29. So I'm going to give myself those extra cents because that's what it was. But when I was typing up the chart, it was 56. So I will have this in our Market Watchers recap, and you could go back and write down which ones we had or go look at those later. And with that, Tom, 9:30, I'm going to pass it back to you. I know I would be interested in some of your thoughts on this, and I know we do have John coming in.
Yeah, I got a couple of things here before we get into that. One thing I just want to mention, there was pretty heavy volume on Friday in a number of stocks, and one of the reasons is that it was a one of the quad witching days of the year.
Ah, yes.
So it was Friday was the third Friday of December. So I think it's December going back. I think September, June, and March are the quad witching months where we tend to see more volume. So I pulled up the NASDAQ just so everybody can see this. This was the volume. You see this huge volume bar and the spike on Friday. And if you go back to September, you'll see it here. That is the quad witching day. Back to June, June 16th was the third Friday. So here's the bar there. And then if you go back to March, you'll see it. So it wasn't unusual. I mean, I try not to read too much into volume on those particular days because they just tend to be higher volume days. But again, that's just my own personal.
No, that's a great point. Typically you see a lot of volume and maybe not a lot of price movement. That's kind of typical, right?
Yep. And then the other thing too is that the 15th tends to be a very big day for dividends. So a lot of companies, because the dividends come out on Friday, it's just another reason sometimes to drive folks in or out of stock. So I think that can add to the volume as well. So between those two theories, I would say that they probably cover for the most part why we were seeing the high volume on Friday. And then probably too the anticipation of the tax cut bill that's going through the GOP. A lot of folks very optimistic that's going to get passed this week, perhaps early this week. And so you got all of that kind of coming in, and we seeing a lot of volume, and especially in many of those smaller cap names that we were looking at earlier. One thing I want to talk about before I bring Mr. Hopkins in, this was a Chart Watchers weekend. For those of you maybe who aren't familiar with Chart Watchers, the newsletter, I just want to point you. If I was not a member, if I was coming into stock charts for the first time, this would be the first thing I would do. If you go to the blogs page, you'll come up with this page. And on the right-hand side, as you just scroll down a little bit, you'll see Join Chart Watchers. You can put your email address in here, click the sign up button. And as soon as the Chart Watchers is complete, and it's done the first and third weekends of every calendar month, as soon as it's done, everybody's posted their articles, you'll get that sent out to you. It's free. It's completely free. There's no reason not to get it. You got some tech titans like John Murphy posting his thoughts in there. Anywhere else you read John's stuff here at Stock Charts, it's behind the paywall. But this is one way to get access to some of John's thoughts without having to pay for it, which I think is pretty cool. So anyway, you want to definitely sign up for Chart Watchers. And within this Chart Watchers article weekend, I went through and I try to read everyone's article because it's a weekend, number one, so I have more time. But it was really interesting to read this weekend. A couple of things. First of all, John Murphy talked about the QQQ and how it had broken out to an all-time high, and you can see that continuing today. But that strength in the QQQ, John correctly pointed out, one of the reasons was Mr. Softy, Microsoft, MSFT, also made the breakout. You can see above these tops. So I think that, and of course, with the heavy volume day, you can see the volume really poured into Microsoft. And also, John talked about small caps. And I think kind of astutely pointed out that this is a group that stands to gain more from a tax cut than many of the multinational companies. So the fact that everyone is anticipating this passage, that could have been some of the reason why we're seeing so much money now moving back into the small cap area. So he pointed out that the IWM, which is the ETF that tracks the small cap Russell 2000, there's been very strong correlation between the IWM and the XLF, which is the ETF that tracks financials. Also, strong positive correlations between the IWM and the XLY, which is the consumer discretionary space, and also IWM and XLI, which is the industrial ETF. So with those strong correlations and seeing leadership in those areas, I think that too is tending to drag the IWM. So I thought it was a great article that John had. And again, if you're a Chart Watchers member, it's free and you get that kind of information. I know Greg Schnell talked about liking the metals, miners, and retailers, and he pointed out TPR, LB, and Kors, KORS, as three that he really was pouring his love all over this weekend. Arthur Hill had a great example in his article talking about October and the fact that we were so overbought. And essentially what he was saying is, so what? We're overbought. That doesn't necessarily mean we're going to pull back. And he pointed out astutely again that the S&P has gone up 6% since it technically became overbought. So if you're looking at overbought levels isolated as the only thing you're looking at in the market, you're probably not looking at enough. Aaron, I know when you were talking about some of the things that worried you a little bit with small caps, but you had posted a bullish seasonal chart for
Yes, I did.
Yes, you did, for the small caps relative to the S&P 500. And that's what we're seeing right now in the second half of the year, second half of December really tends to be very, very bullish. So I want to just pull up for anybody who hasn't seen this. I think this is pretty amazing. And let me pull up just the beginning of my article. And there we go. So if you go through, what I did right at the beginning of the article is I just gave you the annualized returns for each calendar day from December 16th through the 31st on the Russell 2000. And this goes back over the last 30 years. So from the last 3 decades, this is unlike any other period during the year. There's no other period I'm not going to say that I'm not aware of, because I'm aware of all the periods, and there's nothing that looks anything like this in terms of just consistent day after day annualized gains. And you can look at these numbers. You can go into the article and take a look at them. But what was really interesting to me is the Russell 2000, December is by far the best month for small caps, but it's not like every day in December is created equal. You can see December 1st to the 15th, minus 3.27% annualized return over the last 30 years. So first half of the December, and that lined up almost perfectly again this year. The Russell 2000 didn't do a whole lot first 15 days, but it is starting to catch fire. And look at the annualized return in the second half of December for Russell 2000. So there's something to be said for it. No guarantees. History never gives us any guarantees, but the odds certainly seem to be in the favor of the bulls. So with that, I'm going to go back and take a look at one final article. I think this is a great lead in to the earnings spotlight. And so here is John Hopkins' article. And actually, that was the older one. Let's go back to the new one. I want to make sure we're getting the most recent stuff here. But John had wrote an article about traders having one common trait, and that being that they manage risk. And we talk about that on the show. We really try to drive that point home, not only during the earnings spotlight segment, but also during other segments of the show when we try to, just have everybody think about where your stop would be, what you're looking for in terms of a target, and all of that. So I'm going to bring John in just a second. But first, this earnings spotlight is brought to you by earningsbeats.com. Earningsbeats.com is a trading service designed to set up high reward to low risk trades. This strategy has resulted in a 2017 risk-adjusted return that has outperformed the benchmark S&P 500 fivefold. Earningsbeats.com only trades companies that have beaten Wall Street estimates as to quarterly revenues and earnings, and they will teach you how to spot great trading opportunities that focus on both strong fundamentals and strong technical charts. Learn to exercise the patience and discipline of an experienced trading service. Earningsbeats.com, better timing, better trades. And with that, Mr. Hopkins, I enjoyed your article over the weekend. How are you doing today?
I'm good, Tom. How are you?
I am doing pretty darn good. I met Aaron earlier. I went to the football game, so I saw the Packers and the Panthers. I know you're a football fan. I won't mention your team.
But you know what? I'm going for the Lions this year. They're doing fine.
Yeah, they just don't get to the playoffs very often.
I know.
But I wasn't going to bring it up, but you brought it up.
Yeah, it's just one of those things where you're just sort of punish yourself year after year. I don't know what to say. It's like a death wish.
Hey, I'm a Redskin fan, so I shouldn't even.
Yep.
You know all about that. Anyway, great article on Saturday. I thought that was pretty cool. You know, and you
Thank
pulled
you.
out a couple trades in there. One didn't go so well. I also think that's a good thing because I think it's not really realistic for people to think that they just come in and just keep buying stocks and they all just go up, because that's
Yeah.
not reality.
Yep.
So the reality is you got to be willing to take some profits when you get them, and also be willing to cut loose of those losers when you
Yeah.
get them as well.
Exactly. And you know, Tom, I'm in a preaching mood these days. Okay, and my preaching really has to do with understanding the concept of risk-adjusted return,
Mm-hmm.
which is something, you know, that some people are very familiar with. Others, maybe they're new and listening and learning. But let me give you an example, or stop and think about this for a minute. Let's say that I provide you with 5 stock trading opportunities, and they're all valid on their own. In other words, I can defend, putting a stock out to somebody with an entry point, a price target, and a stop loss. And I feel comfortable about all of them. And I put all 5 out, and somebody takes a look at the 5, and they, for whatever reason, they glum onto one stock. So I'm going to put my capital, 100% of my capital, in this one stock. And they put their money in the stock, and it goes against them. And before you know it, they're down, 5, 6, 7%, and really frustrated. That can happen, if you are really putting all of your eggs in one basket. And the whole idea behind the risk-adjusted return is you're spreading that risk. So if I've got 5 stocks that I think are solid opportunities, and you take a fifth of your capital or whatever you want to put into it, there's a better chance that you're going to have success than if you buy that one stock and it goes against. Now, you might get lucky, Tom, and buy that one stock that goes up 10%, and you're going to be feeling really good. But honestly, you and I both know it doesn't work that way. And what we found over many months, we went back and studied, from the first quarter, a lot of trades that were sent out to our members. And what we found was on a risk-adjusted basis, we clobbered the market by 4 to 5 times. And the reason we did that was because the winners were averaging 7%, I think, over about a 12-day period. And the losers, the ones that lost, were down to 2%. So even though on average, even though you had some losers, the fact that we got involved in them at key support levels and spread the risk around made the return positive. And I want to go over a couple stocks with you, if I could do that right now.
Sure, I'll pull them up.
So let's pull up a couple of winners and a loser and one that we just put out. But let's go ahead and start with PANW.
Okay.
All right. This is a stock, reported earnings, nice gap up. We got really, really patient with this one. Got involved on the 7th of December after it pulled back nicely and showed signs of recovery. Entered at 140.95 with a price target of 149. Friday, it got up to 148.40 or so in that range. We issued a profit alert because we were so close to where we wanted to be. The risks started going against you.
Mm-hmm.
So I want to point out that when you're trading, if you're setting a price target and a stop loss, you take your profits when they hit, and don't sit there and say, gee, if this can get through a certain level, I could make more. There's a reason you're setting that target. So when you hit it. And that's what we did on this one.
Yeah, and I also would point out, because I don't think too many people think about this, when you get in near, say, a gap support or a moving average or a price support or whatever, your reward to risk in that situation should be pretty strong, because you don't want to give it too much room below whatever it is, whatever support level you're looking at. But by the time you make a move like this and you go up $6 or $7, that reward to risk is not the same anymore.
That's correct.
I mean, it could pull back and go back to that where it just was and hit price support, and all of a sudden those gains have evaporated. So, and again, this may not be appealing to long-term traders who are looking maybe to hold for many months or years or whatever. But for somebody who's trying to manage their capital near term, I think that's a really important thing to consider, and it's overlooked a lot, that your reward to risk setup changes as the price of that stock.
Absolutely. I'm so glad you pointed that out. All right. So the second one is ESIO. I'll give
EIEIO.
ESCIO. I'll give you the setup on this one.
Okay.
12th of December, so last week, we had two entry points, a 1987 and 1935. They both hit. Okay.
Okay.
So you had a blended average, I don't know, let's say 1965 or so.
Mm-hmm.
We had a price target of 23.90 and a stop of 19.24.
Mm-hmm.
So the reward to risk was high. Now, Friday comes along and the stock, it was struggling a little bit at the 20. The market's been up a lot. So I sent out a profit alert, said, we're going to take our 10, 11% over a couple of days.
Mm-hmm.
Okay. If it keeps going, more power to it. And it has kept going.
Mm-hmm.
So if you're still involved in the stock, you're going to raise, you're going to raise your stop. Okay. Because like you said, the higher it goes, the reward to risk equation changes. But I don't have a problem over a 2 or 3 day period taking a 10% profit. And by the way, if the market had gone the other way today, it easily could have pulled back to that 50-day moving average, and that 10% could be gone. So you can sit there and guess, but I just said, let's take our money and move. After a couple of days, I'll take it.
Yeah, actually, I own this one. I did the same thing yesterday. I actually took profits on this one, and I'm just going to give everybody a quick example. A lot of times when you get these stocks, even though they're strong, when they make that first move up, look at what Applied Materials did when it got to that 20-day moving average. So this was a very strong stock, but it just went through a period where money rotated away, and it got that first move and gets to the 20-day and completely reverses. Now, this candle obviously looks a lot different than the one on ESIO, but the same principle to me. When you get that move up, all of a sudden that reward to risk scenario changes quite a bit. And there would have been nothing keeping the stock maybe from consolidating and moving back one more time. So I agree with you, and I actually did it with my own money. I thought that the reward in just 2 or 3 trading days was too much to pass up. And I had a feeling that it would go higher.
Yep.
I still think this thing could go all the way back up to this 27 area, but I wasn't willing to take that risk.
Yeah. All right, a couple of the quickies, and we'll wrap it up here. I want to show one that didn't work. That is EXTR, Extreme Networks.
Yeah, we talked about this when I saw it in your article too, so I was anticipating.
Yeah, I mean, it's recovered a little, somewhat today, but it's still struggling at that. The market's going crazy, and this thing's struggling to get back over its 50. So we got involved in the stock last week early at $12.39, had a price target of $13.50, but it closed below the 50. It closed below the 50. So we ended up getting stopped out down 2.9%.
Was that your stop? Was that your stop below the 50?
Yeah.
Okay.
And I could live with that. It closed at 12:02, I believe, on Friday. I can live with a 2.9% stop. I can't live with, if I hold it and it just continues lower and it's down 10%, I don't like that.
Yeah, if it
It's too
doesn't
much
hold,
for me.
yeah, if it keeps rolling over, it easily could go back to that November low, which would be that 10% loss that you're talking about.
Exactly. And the last one is AVID. This is our chart of the day. You can find it at earningsbeats.com. Anybody can click on that and get the information on it. This is a stock. It's really interesting that little, smaller cap. Some people like smaller price stocks, but you can see some really nice green bars. Then it pulled back, below the 50. To me, it's in the consolidation mode here. And I like the reward to risk. So I'll put an alert out to our members today. 592 was the first entry. 570 is the second entry. And if the stop closes below 558, it's gone. So if you get involved, if you buy at both levels, you're looking at less than 1% stop if it goes against you. To the upside, I think it could get back to that 690 level. And I think if it gets up to 690, you can have a 15, 16% winner. I like that reward to risk. And that's all about the adjusted, risk adjusted return as well. You have to, be honest and keep your stops. Nobody likes losing, but you got to honor your stops. And if you get within any proximity of your price target, like you said before, the risk reward starts changing. So you take your profits and move on. And I wonder if I could mention, we're going to have a little event this afternoon.
Yep.
We're going to have a webinar. As a matter of fact, you're going to jump in on it. And it's going to be exciting. We're going to be talking about risk-adjusted return, just elaborating on the things I've talked about now. And then Tom's going to talk to people about utilizing stockcharts.com chart list, which is a powerful tool. We scan for stocks that beat earnings. We put them in what we call it our candidate tracker, but it's really like it's a chart list. We've got a little over 275 companies that beat earnings and could be setting up some of them for decent trades. And so if anybody wants to jump in on the webinar, you can just go to the Earnings Beats website. There's a holiday special. It's really it's basically not much cost at all, but it'll get you into the webinar and get you the chart list. And the chart list is the powerful part of this, because then you can start using stock charts, powerful system. You can tell this chart list the parameters you want to set that you think are important for trading. Maybe pulling back to the 50-day moving average, maybe a volume indicator, maybe MACD, looking positive. It's quite a powerful tool, Tom.
Yeah. And for those of you, I don't know, everyone may not know the relationship. Prior to joining Stock Charts a couple of years ago, actually almost 3 years ago now, wow, time's flying. John and I worked together at investedcentral/earningsbeats.com. And so this candidate tracker that he's talking about was actually developed back in the fourth quarter of 2013. And when I talk about my strong earnings chart list that I keep at Stock Charts, it's very similar, if not identical, to the one that John's referring to as the candidate tracker at earningsbeats.com. So one of the things that we're going to do in this webinar later today is John is going to go through the risk-adjusted returns. I'm going to go through and show you how you can run some of these scans that John's talking about against that chart list to pull up some of the candidates that we've been talking about. What I found interesting, John, is that the AVID alert that you sent out today was one of the 5 stocks that I put in my Chart Watchers article on Saturday.
Okay.
So we're basically pulling from the same,
the
same lists, and I'm starting to see some of the same stocks that you talk about that I've already covered. But AVID looks kind of interesting, but it is a more volatile stock, and certainly
no question.
But
that's why you've got a tight stop on it. If it's going to stop, it's going to stop. But if it turns, I like, a 16% potential return to the upside with a 1% to the downside.
Yeah, that definitely works for just about anybody, I would think. I did pull up your holiday special on the earnings site. You can always go back into John's articles in Chart Watchers. I think the last 2 you had links to this page. So you can get the links there as well. But it's earningsbeats.com. Again, thanks for coming on, John. Really appreciate the information.
Okay, thanks so much.
Yeah, I'll see you this afternoon later.
Okay.
Sounds good. There he goes. All right. And with that, I know we are running just a few minutes late, but we do want to get over to the 10 in 10. So that is where we are headed now.
All right. 10 in 10. Let's get this party started.
All right.
All righty. So the first one, as we were saying earlier, is going to be SOXX.
All right. This one definitely SOXX. All right. That's not easy to say. I'm just going to type it in. I'm not saying it anymore.
It's certainly Monday, so everything's harder to say.
Yeah, we're starting to see many of these semiconductors, and we talked about this last week in Momentum Sleepers. This was one of the groups that I thought was just like this laying giant, and I was waiting for another move higher in the semis, and we're starting to see that as we approach the end of the year. I think this nice uptrend, we got to keep in mind when you see a pullback like this, you got to keep it in perspective. This group was absolutely on fire for about 3 months where it had hardly any pullback. And now, to me, it's starting to look like maybe a cup. We'll have to wait and see how it performs. But I love the fact now that we're getting back up above the 20-day moving average, because in a real downtrend, that 20-day moving average should fail, and we should make a new low. And instead, we're going back up above it. So I think this SOS. Oh, that's it. I'm not saying it. I'm just going to go with the annotation. I do think that the recent low, right here at about the 165 area, I think we want to keep an eye on that. But now that we've gotten back up over the moving averages, I think the first area is going to be that rising 20-day moving average, which is just starting to turn back up again. So I like this group, and I would look for more strength as we head into year end and into 2018.
All right. Popular request, Intel. INTC, nice breakout. Actually, we were already seeing a breakout Friday.
Yeah, I'm kicking myself on this one because this one I did have as a setup. I owned it back here where it lost the 20-day and I got stopped out with a loss. And then I actually really liked this setup. Might have been one of my setups from last week. I think it was, but it wasn't the one I went with, unfortunately. But Intel made a great move. And this was the gap support level that I was watching and that it tested along with the 20-day moving average. Notice the RSI down near 40. Notice the MACD at the center line. And now we're getting this move back up. So I think it's Intel's heading to test that 47 level. If I was in it at 43, I'd probably be taking profits at 47, see whether or not it can get through. But the closer it gets to 47, this is what John and I were just talking about. I think the reward to risk really starts to shift because we don't know that we're going to break out. So when you get to the top of the range, your reward is pretty small because you don't know if you're going to break out, whereas your risk is all the way back down to the bottom of this sideways consolidation. So the higher it gets, I would have no problems taking some profits as it nears 47.
Okay, number 3, MAR.
All right, Marriott.
Yeah, and that good hotel space, I guess, huh?
Yes, it is. It is a good space, and Marriott certainly is going along for the ride here. Continues to move up. I think I'm still good with it. Volume is strong on this move. It does have a negative divergence. That doesn't mean I would sell it. What it does mean is that I would certainly watch for a reversing candle, especially one on big volume. But here's the issue is that right now the MACD is turning up, and we may just simply move up and eliminate this. But right now, we do clearly have higher prices with a lower MACD. So again, if we were to print something like a shooting star, like you pointed out earlier, Aaron, if we were to reverse back and close near the open and leave a long tail to the upside with a negative divergence, I would be out of the stock. But short of that, as long as it continues to trade with nice volume and keeps putting in higher highs and higher lows, I would ride it to the upside. I think it looks good right now.
Perfect. Right now, one I'm using a lot lately, PayPal, PYPL.
Yeah, PayPal remains strong. Again, this is another one. Maybe there was a little bit of a negative divergence. Went back to the 50-day, but notice it's climbed back above that 20-day moving average and is starting to trend higher again. I think for now it's just in a sideways consolidation mode. So I think you've got some really good, you can see the big gap up on volume here that took out the prior high. That becomes support. And notice it has been holding. It held right after the breakout. And then again in early December when we pulled back, it held again. So that's your support. To the upside, the recent high, which is just above 78, maybe close to 79. That's the trading range. I'm going to say 69 to 79. MACD just turning up from the center line. I expect we're going to get a breakout. That's just because that's what happens in uptrends. We get breakouts and support holds. But right now, I think if I was looking to enter, I don't like the reward to risk. So unless you use the rising 20-day as your risk. But all the way back down here to the recent price support, you can see would be giving it way too much room based on a $79 target. But I like PayPal. I think it consolidates. I'd be looking for heavy volume to confirm the next breakout.
All right. Next one on the list, XES.
All right, XES. I would say that there is a pretty strong resistance that we need to watch. And it's pretty clear to me that it comes in. I mean, I could draw a line there. And then I probably could also draw a line here with this support level. Here's the breakdown, increasing volume. And you can see this range is where we keep failing. Look at this tail off of this move to the upside. See that shooting star right there on a false breakout? That's what you want to be careful of. And, shortly thereafter, you can see it's just been drifting lower. And then your trading capital gets tied up. Not only do you give back profits, but then your capital's tied up when you can be in other things that look much better from a reward to risk standpoint. So that's why when I see those at resistance, I take my profits and move on. Watch this level, though. This area of resistance is key. Heavy volume and a breakout above, say, 1660 to 1670 is what you want to see.
Okay, let's see. Next one, TD.
All right. I skipped one. Okay, TD.
Mm-hmm.
Toronto Dominion.
I think so.
Yep. Okay. All right. We're below the 20-day, and you can see that the volume has picked up a little bit. So I'm a little concerned until we get back up above that 20-day moving average. So unless I was at a critical support level, which I don't think I am, certainly not after today's gain of 1.34%. But if I use the auto support resistance line, I'm going to say that there's pretty good support right in here. We had a couple of tests of it, and then we went just beneath it on Friday before bouncing back up. I would watch this falling 20-day moving average. I think that is your resistance in the near term. And to the downside, our Friday close, if we lose that, especially with a failure to get through the 20 and then reverse back down and go lower, that would be a little bit more concerning. I think the longer term we're probably okay, but I think if we pull up, say, a trend line, you probably will notice that we have a little bit more room to the downside. Well, not really. Actually, it's actually broken that trend line as well that was established. So I don't know. I mean, you could look at the next support level, which would be probably the top of that gap right here, along with this prior high back in, what was that? I guess that was back in February. So this one, if it doesn't hold Friday's low, we could look back down to around 52.5, 53. So I'd want that to hold.
All right. Next one we have NOC.
Right, that's Northrop Grumman. Yeah. So that's in the defense area, and I like that space. But let's pull up the chart, take a look at it individually. I would say we got pretty close to a 50-day test after divergences weren't so great. But volume here in December has been pretty good as we've made this move to new highs. So I think for Northrop Grumman, I'm fine with a hold. I think this one continues to move higher. Looking at some key areas of support, I'd probably say that hammer that went in back in October is probably pretty important. And then we've had some recent tests here at about 295. So I think the support zone is maybe 290 to 295. We just recently had another breakout above the late November high right here. So I'd say even the current price down to the rising 20-day should offer up some pretty good support in the near term on Northrop Grumman. I think this one goes higher. I think it's in a good space. And so if anything, I'd be on this one on the long side.
Okay, next one, ever popular NVIDIA.
Yeah, NVIDIA going to get a pop too with semiconductors starting to roll. This is another one that, it just was straight up for about 2.5, 3 months. And so when it pulls back, it just doesn't feel good. And you see the moving averages lost. But the most recent low was not lost. Price support, which again is why, for me, I think it's the most important thing on the chart. So you could say this prior high is a key area. And then you could see this gap support down here. We kind of went in this zone. So this 170, 174 area to me would be the biggest support. If I owned NVIDIA right now, I'd want to see it close above this 20. If it failed, I'd probably, bail and see if I got it a little bit lower. My guess is it's not going to fail, though. I think the market's going to run into year end. So I would be looking for this movement to the upside to continue and to perhaps make another run at that 215 area. So I do like NVIDIA.
Okay, two more. AA, American Airlines, I believe.
AA, is that Alcoa?
Oh, Alcoa. See how bad. I don't trade enough to know all these symbols like you.
Yeah, let's see. Well, you got a positive divergence that's helping Alcoa get back to its 50-day. Now, we don't normally see enough weakness in stocks in an uptrend in a bull market to post positive divergences. So we haven't really talked about these much, but there's your lower prices. And you can see that the MACD is clearly turned up during this period. So instead of failing at the 20-day moving average like it actually had enough strength to get back up to the 50. But look where the MACD is heading, toward a centerline reset. So I think AA has got some work to do now to get through gap resistance and the 50-day moving average. So this is one that I think I'd be real careful with. If I was in it, I'd take my money and run and wait and see if I can get a confirmed breakout above the bottom of gap resistance and also that 50-day moving average.
All right. Last one. Fifth Third Bank, FITB.
All right. FITB. Well, I like the banks. So I think that's going to be good. I like this bounce off the 20-day and price support. So there is nothing that I don't like about this one, except that it's already made a move. So if I was looking to enter, I probably have missed out on what could be the better, solid, more solid reward to risk entry. But there's your gap support between here. You can see solid volume on the move up. Also, the prior high, which was resistance, becomes support. So I think you've got great support on the stock between 29 and a quarter and 29.50. And anything in that area would be a buy. I'd watch the rising 50-day moving average. We haven't had a close below the 50-day moving average in over 3 months. And I think in the short term, we're going to make another run up for 31.50. So I think FITB looks good. Currently, with the move it's already made, 2% today, it's probably not a great reward to risk trade in either side. But I do expect that we're going to see 31.50 in the near term.
Okay, that completes the 10 and 10. And let me just give you a quick summary of which ones we covered in the 10 and 10. So these are the 10 symbols. I will have this chart in the Market Watchers recap, and the charts will be in the Market Watchers live chart list. So I guess at this point, let's go into our final market update. All righty, here we go. Okay, so I'm going to go right into our candle glance, which you can get to over here. Excuse me. Okay, so as we can see, really, nothing's really changed that much. We had that big pop rally in the morning, that rally pop, and now we're pretty much consolidating straight across. I've been expecting a pause here, so maybe we got the rally pop, and now we're looking at some more consolidations for more than a day. I'll have to see. We can see small caps, same deal, rising on the open but moving sideways. Treasury yields are now rising. They're getting close to intraday highs, currently reading at 23.80. We have UUP with a gap down, but it is starting to consolidate sideways. We can see that commodities are higher, which is actually a little bit unusual because they are so affected by what's going on with oil. And as we can see, that double top did end up executing in a big way with a very low drop. Currently, USO is reading at 11.39. GLD had a nice gap up on the open like the major markets, but is now starting to consolidate sideways. The VIX is still nice and low. We're looking at 9.3, and advances are leading declines at this point in time. I told you last time we would look very quickly at our scooter movers. You can get to it right here. You could change it, of course, to top 10, whatever ones you want. But the scooter movers, this is where I go to see where our strongest, highest batting average stocks are. And as you can see, interesting, not surprising to see Urban Outfitters, Michael Kors, a lot of discretionary stocks near the top, these cyclicals. We have top up. Who are the big movers right now? We can see that SM Energy is making the biggest scooter move. Looking at this chart, though, for the last, it looks like a 3-month chart. We could be sitting on that support level, and I'll just pull this up very quickly. We're sitting on that support level, and it looks like if we can get that turn, that would be very positive. And the scooter is telling us that we should pay attention to that. Of course, I would look at this and see that PMO, and I'd want to wait for a turn. I want to see the momentum move more than just the scooter. So something to consider. And with that, I'm going to end that final market update. And I'm going to move right into the DecisionPoint report. Did you have any comments on the market update, though, before I do that?
No, I mean, we're seeing the market pull back a little bit, but no, I didn't really have anything else to add. So feel free to go ahead and give everybody an update on the DecisionPoint numbers.
Let's do that. Actually, I was looking at the sector rotation chart. I'm just going to start with that. It's not really in the DecisionPoint report. But I like to see where the sectors are going. This is a very short-term look. We're looking at a 1-year daily for the RRG. Basically, it's a relative rotation graph. So you're looking at where we're moving and as far as the sectors, which ones are leading, lagging, correcting, etc. So at this point, I thought it was pretty interesting. Industrials, financials have been near the top. Not a surprise when you see the move we've seen in the Dow. But really, consumer staples are starting to get hit a little bit here in the short term, starting to weaken. You don't like to see those southwest moves on the RRGs. you want to see a northeast move. And right now we can see with XLK technology made a huge turnaround and has now moved into the improving sector and is continuing in that northwest direction. So certainly doing better than anything here. It's the only one that has that direction going for it. So something to consider there. So let me get right into the DecisionPoint report. And you'll find these charts in the DecisionPoint live chart list. And these are reachable from the DecisionPoint blog page. So you'll find that link there. So I'm first looking at the 10-minute chart. I'm going to basically go through pretty much what I'm going to write about this afternoon. So pay attention if you can't read my blog or watch the show. So you've got that big gap up, of course, today. Nice rally pop. But as I was saying, we're looking at this sideways move. I find it really interesting, though, when you look at this area of support resistance, how Friday we came off, had a nice move higher, and we did pull back, and we pulled back right to that support line. So I think it's very encouraging when you see a bounce of this degree off of a support line. And so that's a 10-minute bar chart. So let's look at a daily chart to get a better feel for what's going on with the SPY. And I'm showing you the SPY because that is what DecisionPoint timing signals are taken from. So if we get as far as trend model signals, those are the ones that I'll post when we get those changes, not necessarily on the S&P 500. I do update our scoreboards, though, for the S&P 500, but I want to show you the SPY because that's where we get our trend model signals. So really nice to see the PMO is now, extended itself beyond that last top, which I find, of course, very encouraging. You keep waiting for this pullback. We keep waiting for this overbought market to pull back or correct. But as you can see, that's just not the way the market works right now. What happens is we pause. We hit these new all-time highs and we pause, and we hit new all-time highs and we pause. And, I thought we were at that pause point until, of course, on Friday in the thumbnail, you can see that breakout. And now we've got the gap up. As I've been saying, I always worry when I see these gap ups. We don't want to see a shooting star here. That would pretty much practically guarantee that we're going to have that closure and it's an island reversal. So there are no guarantees, but it would certainly imply strongly that we would do that if we see the shooting star. If we don't, I think we could see prices moving higher, but I still am looking for some consolidation here. I don't think we've had enough of a pause. I think this was a pretty good one, but now we've had this nice rally. We've hit a new all-time high. It's time for the pause. So we'll have to see how that pulls itself together. All right, I'm going to go over our indicators. This is the climactic indicators. I use these as a very, very short term, like similar to candlesticks. When you're looking at a candlestick, it's super short term. You're only comparing it for that day and possibly in the comparison to the day before. So similar. And I think this is a really great example of how these climactic moves work, because we got a climactic move on Friday to the upside on the breadth, on the net advanced declines. And I think that was very interesting because I immediately, Carl had the writing for the day, so I didn't comment on this. I suspect he probably did. And this is a big climactic move to the upside. So what I have to look at when I get those moves, is this an initiation or is this an exhaustive move? And so it was in the positive direction, and I come over to the thumbnail and I look at what happened the day or two before we got those readings. And the day or two before, we were in a decline. Granted, a very small one, but we were still technically, you could see, in a decline. So I would read this and would have read it if I had written about it as an initiation. I'd be looking for a rally pop. And we got the rally pop. So it's easy for me to say 2020. Yeah, that's what I would have been looking for. And hey, we got it. Truly, that's how I look at these climactic indicator moves. And every single time, that's what I do. what have we been doing? For example, we got these climactic moves, somewhat climactic, but we were also sitting on the top Bollinger Band for the VIX in addition. So I got these climactic moves to the upside, and I would be looking at what happened previously, and that would be a rally. So it's an exhaustive reading. And sure enough, we ended up moving sideways and a little lower. So I think these are pretty good indicators to watch, but it's very useful to use them all in combination with each other. And, we're sitting at the top of the VIX. It would have been very tempting to look at that as an exhaustion because the lower the VIX gets, to me, that's overbought readings as far as the very short term. And so I would expect when we get those penetrations or pushes on the upside of this Bollinger Band, which means lower readings, I consider that overbought. Things are sentiment-wise really complacent, and so I expect a move down over those next 2 days if I get the break above those upper Bollinger Bands. But I think Fridays was certainly an initiation phase, and certainly that is what we've gotten. But look at that candle. If we end up closing much lower on the day, I would be a little bit worried about that. Short-term indicators are the reason why I'd be a little worried. Although I have to say, I think with a move like we have today, they will probably turn up. But at this point, these indicators are reading on the bearish side. Bearish, like I said, in today's market, bull market, meaning pause, likely maybe a little bit of a pullback. The good news is, I think, with these indicators, when I look at it in the thumbnail, is that, we had that pause and they were able to get at least out of that overbought zone. We're still, we're awfully close to overbought here, which could be a concern, but, I would like to see these turn up above the zero line, and that's what would occur if we do get that move up. I will write about these short-term indicators, which will go final at the end of the day. Right now, you're looking at Friday's readings. And so short-term wise, I would look at this chart and feel more on the neutral side. I would expect more pause, something to bring these a bit lower. But now that we have this pop today, I would expect to see these being turning up today, but we'll have to see what ends up happening after the close. Intermediate term wise, I decided I wanted to point out these negative crossovers on the ITBM and ITVM. You want to look at these. They are telling you what the intermediate term flavor of the market is. And, I'm watching for negative crossovers. We had that dip on this pullback, and I kept telling everybody, it's not good to see them turning down, but I'm not going to worry until I get a negative crossover, because that's when things like this happen. And then you look at what the typical reaction is, and you can see in this case a small downturn here. Pause. Again, things have kind of gotten a little different here in 2017, but I think these indicators are really a great tool to see what's going on. And currently they have turned up above their signal line. So I'm still feeling good about the intermediate term as far as being bullish. Let's look at the big four very quickly here. And, I pointed out that we might have a head and shoulders developing on UUP and the dollar. And wow, it's still going that direction. It's starting to look really textbook. And that, if it were to execute, you're looking at a pattern, the height of this pattern. If you added that to the breakdown point of the neckline, where it'll bring us down below that previous bottom that we're seeing there. The PMO is still unsure. It's moving sideways. It's still technically on a buy signal. If we get that sell signal, I want to see how deep the how far it goes below its signal line, because I think that will tell us whether it's kind of a short momentum thing. If we're looking for the execution of this head and shoulders, watch the margin on this. Even if we get the PMO sell signal, watch the margin, and that'll give us a better feel as to whether this pattern that appears to be forming will actually execute. So on the dollar, I'm feeling bearish still. Gold is looking better, and I think there's some interesting information here that I definitely want to point out. And I apologize that my chart is so long that I'm not going to be able to show it that well, I don't think. But when we had this turn up, there wasn't really any obvious support or resistance. And so when that happens, I pull out my volume by price, because that usually gives you a really good feel for whether there's support or resistance at that level if it's not really obvious. And in this case, it was pretty clear that this would be a support level, and we got the bounce right off that level. It's just love to see technicals work that way. The PMO is starting to turn up, but we haven't gotten above this area of overhead resistance. I think that we might just do that. With the PMO turning up. And then this was the interesting thing, and I've marked a couple 3 times. We're finally starting to see what I would call very bearish readings on our premium discount study that we do with the Physical Gold Trust. We track based on what people are buying, whether it's at a discount or premium, just that's what we figure. And so I want to see these big readings to the downside to prepare me for a rally in gold, because sentiment contrarian. If everybody's very bullish, expect that turn up. And we're finally starting to see some readings that are getting in that area. So the thing I do want to point out, though, these typically do come before rallies, right? Well, what the heck happened here? I'll show you what happened here. Let's go down and look at and compare what happened with the PMO and what was going on with the scooter. What are the differences? We had oversold readings. We saw a turn up on the PMO, and in this case, a buy signal. So these were set up momentum wise. They were ready to go on those very high bearish readings. Well, what happened here is that we had just got a PMO sell signal. We could see the scooter was already in decline. So yeah, these were very bearish readings, but they were bearish for a good reason, very good reason. And that was that setup. So we do want to see those really bearish readings. They tend to come on nice bottoms. And currently we're starting to see those kinds of readings. I'd like to see them get above that 0.8 range. But it's lining up pretty nicely here with this bottom. But this is a very important level, and we haven't quite passed that up. Oh, let me go back. All right, I know I'm running short on time. Okay. All right, so as far as USO, I'm starting to finally get bullish on it. We've been in this trading range, so it's been very hard to really get a feel, but what I'm seeing is a nice flag formation now. Yes, the PMO is on a sell signal, but this is good. This consolidation is starting to unwind it, so it could turn back up. Look at the scooters still in the hot zone. At this point, when you look at the price of oil, there's still a lot of upside in this trading range. It's pretty much sitting midway. And finally, TLT. And somebody did have a question about the difference between the accumulation distribution line and the OBV. It's a pretty simple equation here. So anyway, I'll discuss that when I get down there. We've hit that overhead resistance, and we are starting to pull back. The PMO has turned down, but I'm still seeing a positive divergence here. The tops on the PMO are rising with the price tops. So we've got to watch this overhead resistance. Currently, it's holding up. So my expectation would be a drop down here in this rising wedge, which is also bearish. Probably will able to hold on to that rising bottom support line. And then maybe at that point, we'll see it head back up. But I think we're probably in line for a trip back down. We're seeing the scooter and the OBV on that decline was moving lower. Encouraging to see it move higher. So what's the difference between the AD and the OBV? The OBV is not weighted. So we have the what the reading is for the OBV, and on that day, if it closes lower, all the volume is assigned to the lower side, so you just subtract it. And same with the upside. With the accumulation distribution, it's more of a percentage of, help me out here, Tom, if you can remember, but it's weighted, basically, depending on how much volume is to the upside and how much volume is to the downside. So it's not just a straight up calculation that way. So there are days where the OBV will turn lower because the close was lower, but the AD line might go higher based on when the close was in comparison to the open, I believe. Something to that effect. But you want to go look it up. The main thing is the OBV is pretty much the simplest calculation. I use it because I used to manually calculate it with a calculator on a graph paper. So very familiar with that. So I like to use that. Anyway, we're about 5 minutes to the end here. I answered my mailbag question, which was OBV versus AD line. Did you have something you wanted to answer, Tom, or just we can wrap this whole thing up? Let me show everybody what we did cover today in the DecisionPoint report. And here you go. I did that review of the SPY. I've got your indicators in there, and you're going to find all of these in today's DecisionPoint blog, because I'll be writing a blog about all of this. So stay tuned for that.
Okay. Well, we did have a couple of questions, so we'll go ahead and do this real quickly in our mailbag. One question that also had come in for you, Aaron, was, and I just grabbed the screen, unfortunately, but you'll be able to answer this without using the chart. The question was, what EMAs do you use on your 10-minute chart? Do you still stick with the same number?
Oh yeah, it comes up with I know they're weird. I can't remember what they even are. I'm gonna go look while I'm talking here, but it's which one's doing it? It's the main thing. Just like with my weekly EMAs, they seem kind of weird. 17-week, 43-week. Where did you come up with that? I've looked at it, and it's a eyeball test thing. We looked at it, and it reacted similarly to the EMAs on the daily chart. And so that's pretty much why we picked that for our 10-minute bar chart. So it's just a matter of preference. And in the case of the 10-minute bar chart, I am using, and it's a very weird one, 135 minutes for the fast EMA and 540 minutes for the slow EMA. And mainly it just is the one that visually gives me a similar look to what's happening with the 20 and 50 on a daily chart.
Okay. Yeah, I don't really adjust mine. I just go with the same. All of my settings are the same based on the period. So it's always like for the MACD, for instance, 12 period EMA and 26 period EMA. So if you're looking at a hourly chart, it's going to be the 12-hour and the 26-hour. If you're looking at a daily chart, it'll be the 12-day and the 26-day.
Mm-hmm.
And for me, it's just different time frames produce different objectives, I guess, on the chart. So that's why I like to keep them the same. If I pull up an hourly chart and I've got the daily, or the equivalent of the daily moving averages on the hourly chart, I'm not sure that the hourly chart's going to tell me anything different than the daily chart would, really.
Yeah.
So for me, I adjust with the period itself. One other question that had come in asking me about stops on ETFs. How do I determine stops on ETFs? Well, the one I own right now is IWM. So for me, it's just price support. So I got in close to the 150 area. I think it was between 150 and 151. And so as long as I can hold, say, 150, if we move much below that 50-day moving average, we're essentially losing the top of gap support, price support, and the 50-day. But again, I like to try and keep my stops really tight. Technically, I guess I could have sold the IWM on the move up near 155. But the problem I have with that is that the Russell 2000 tends to be extremely bullish throughout the entire second half of the month. So I'm willing to let it ride at least for a while and see how it performs. So hopefully that helps.
1 minute left.
One little question on the black candles. It's just after an uptrend, folks were wondering what a black candle means, but a lot of times that just is a potential reversal, showing that you gap up after an uptrend and then you can't hold those gains, and you finish with still an up day, which is why it's a black candle, but it's down from the open, and sometimes they can be reversing signals. So with that, let's go ahead and wrap it up. I do appreciate everybody stopping by. Please remember to complete the survey as you exit. We love to get feedback on what you think of Market Watchers Live. As a reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great afternoon, everybody. We'll be back tomorrow on Tuesday. Happy trading.